Let's welcome in Big Technology's Alex Kantrowitz, also a CNBC contributor. It's nice to see you. I appreciate you joining us. What does this story of this delay, even denied, mean to you?
Well, Scott, you opened up the show talking about how there's AI anxiety, and I think that's exactly the case. Right now, the market is, and they believe, market and investors believe that the AI build-out will continue apace and that the numbers that have been shown will be close to what's delivered. And any little blip in that story is going to cause a bit of a panic. And I think that's what we're seeing with Oracle. The delay of the data center build-out has investors thinking, well, maybe that $300 billion deal with OpenAI isn't actually going to come to fruition. Let's pull back a little bit and let's hedge just in case that isn't going to happen. And I think all along this story, anytime we have one of these moments, there's going to be a pullback like the one we're seeing right now.
It underscores what the anxiety really has been about in some respects, the heavy reliance on OpenAI for almost everything.
That's right. I mean, $300 billion, that's the size of the deal between OpenAI and Oracle. OpenAI is, on target to end this year with about a $20 billion run rate. And we know that Sam Altman, when he's been asked about how that he's going to make the math work, did not have a great answer. I think that's been hanging in the minds of anybody watching the story, asking, well, how is he going to make these numbers work together? And again, when there are blips in the story, whether it's from the OpenAI side or the Oracle side, people are taking a hard look at that and saying, is this really going to happen? And you have to pull back a little bit if your expectation previously was that it was. So this is sort of the story that OpenAI and its partners are going to be living with in the months and maybe years to come.
I mean, Oracle clearly is the most acute point of concern here, correct? You look at the stock, you look at the CDS. When you take the story in total, what does it tell you about this particular company in the eye of whatever storm this might be that it's dealing with, even if it's simply a storm of a bad narrative around it?
Well, I think Oracle made a logical bet, or a bold bet, maybe bold and logical, in saying, AI could be one of the biggest infrastructure moves of our lifetimes, and we're an infrastructure company. Let's take on some debt and some risk and try to get to the front of the line. And I think the market reacted really positively when they saw Oracle make that move. But now, the rubber has hit the road a bit, and we see that Oracle has debt, there have been delays, and then there are dependability issues when it comes to whether OpenAI is actually going to put the money up. So that's why Oracle has sort of been under pressure recently. The question is, can it deliver? The signs aren't great that this is all going to come to fruition according to plan. And then for the rest of the market, they catch strays because one company going bad makes people think, well, maybe the others ones will do poorly. And Broadcom, for instance, not like they delivered the worst results in the world, but they are starting to get some of this downdraft from Oracle, from investors, fearing that it could end up hitting others.
Yeah, I was going to ask you about that one specifically. It's a peculiar move given the earnings report may be a victim of nothing more than a stock that has run up tremendously into that print at a time where we already have some anxiety.
Yeah, absolutely. I mean, they're still up 56% this year, even with the 10% drawdown. So Broadcom is doing well. They, of course, have great deals going with Google and Anthropic, and so they should be in good shape. But again, the market is basically, they believe this story that everything is going to go according to plan. And the plan is very, very aggressive, whether that's OpenAI and Oracle or the other companies that are building out this infrastructure. So there needs to be some assurance to investors that it is going to go according to plan. And when there's a blip, even if it happens in an adjacent company, you're going to see a little bit of bad news somewhere else turn into a big drawdown like we're seeing with Broadcom today.